All right, gang, we're now going to take a look at how to handle capitalized assets and the possibility of depreciation. When we're doing this, we have to determine whether or not they're going to use the required approach or the modified approach. So let's go over the fundamentals of those items and how they differ in the reporting. And by the way, as we do this, who's the guy in the sports car? Any resemblance? Let's begin. Development and maintenance of road and bridge infrastructure is a significant local government responsibility. Local governments have the option of reporting infrastructure assets as a capital asset along with the related depreciation, or presenting specified data as required supplementary information using the modified approach. Either approach qualifies as a fair presentation. Now, the cost of infrastructure items such as bridges, roads, all those things may be either entirely handled on the government-wide balance sheet or handled on the government-wide balance sheet and in the required supplementary information. So you have that choice, and you can see right there how we're going to handle them. So we have a required approach and a modified approach. As we've indicated, in this case, the GASB's preference was that governments use the required approach and fully capitalize and depreciate all their assets on the government-wide statements. However, they also recognize that accounting records associated with decades-old infrastructure were not always available. So the GASB gave the government a break. They gave them an alternative to use the modified approach that capitalized only additions and provided an assessment of the infrastructure condition and the amount of maintenance cost as a component of the required supplementary information. That handles how we handle the two of them. I think you're ready now to try a full-blown problem.